Welcome to our channel. If you're trying to decide between an S-Corp and LLC for optimal tax benefits, follow this step-by-step instructions to make the best choice for your situation. Step 1. Understand that an LLC is a legal business structure, while S-Corp is a tax classification. An LLC can elect to be taxed as an S-Corp, combining benefits of both. Step 2. Evaluate your current profit level. S-Corp election typically makes sense when your business generates at least $60,000 to $70,000 in net profit annually. Step 3. Calculate potential self-employment tax savings. S-Corp allow you to pay yourself a reasonable salary and take remaining profits as distributions, which aren't subject to self-employment tax. Step 4. Consider administrative requirements. S-Corp require payroll processing, reasonable salary documentation, and more complex tax filings than standard LLCs. Step 5. Assess your business ownership structure. S-Corp have restrictions on ownership, allowing only one class of stock and limiting shareholders to U.S. citizens or residents. Step 6. Factor in state taxes and fees. Some states impose additional taxes on S-Corp, which might offset federal tax savings. Step 7. Project your long-term business goals. LLCs offer more flexibility for profit distribution and ownership changes, while S-Corp provide clear tax savings for profitable service businesses. Step 8. Consult with a CPA to run detailed calculations comparing your total tax burden under each structure based on your specific numbers. Don't forget to like this video and subscribe to our channel.